Continue their seemingly relentless climb. Stocks much lower as a result. We had record prices today for crude, gasoline, heating oil. Unbelievable.
Time for our last licks from our Fox panel. Peter Schiff. Yes. How bad do you think it's going to get? And I don't just say, you know, we're going to the bottomless pit here. But how bad do you think it's going to get before it gets better?
You're talking about for the stock market or the economy?
When is oil going to turn around?
Well, I don't know. I don't think it's going to turn around for Americans. I think at some point it's going to turn around for, let's say, the Chinese, because I think the Chinese government is going to allow their currency to appreciate dramatically, which will bring down the cost of oil for the Chinese. But unfortunately for Americans, the dollar has a long way to fall, and that means the price of everything, not just oil, but food. I think the next thing you're going to see it in apparel prices are going to shoot through the roof. The cost of living for every American is going to go up because of what we've done to our currency and what we've done to our economy. There's no way to avoid it.
Gary, we're now down 214 points. How much do you attribute the fall that we've seen today to higher energy prices?
I think it's a combination of two things. A, the market ran into major league long-term resistance on the upside, combined with this persistent move to the upside in oil. I got to tell you, when it was first 120, I thought it would go to 100. It went halfway and just straight shot back up. And I have to tell you very simply, nothing good happens if oil prices continue to go up. It is a huge tax on consumer, business, earnings for business, and the stock market itself.
But, Scott, you talk to Phil Flynn and Eric Boland, people who really know this, say every single time there is a movement like this in oil, it eventually comes down. It pops. It might take a couple of years. Even the guy from Goldman Sachs, Arjun Murthy, the guy who 5 years ago said it would hit 100, now says 200. He says, hey, folks, there's a third phase coming. It's not going to come until 2012. But that's when oil is going to come down. So eventually it will come down. We just have to hold on till then.
Right. And then, I mean, $200 a barrel, Dave and Liz and Peter, I think you're going to be talking about different sources of energy, too. I mean, you look at some of these solar stocks.
Well, that's why it's going to come down. There's going to be so much
other stuff. There's going to be alternative energies. I mean, wind energy is another compelling area. I mean, it just costs a lot of money to get this stuff going.
But that other energy is going to get more expensive to produce, too. It's the money-losing value.
Is the cure for high prices that people just simply stop and you see the so-called demand destruction, meaning people just aren't going to drive anymore, they're not going to travel as much?
Well, to a large extent, yes, but that's not a good thing. That's not what we want. What we want is to solve the structural problems, and the structural problems are inflation and massive government intervention into these markets. And the U.S. economy, in a long-term sense, will not turn around until we cure the inflation problem, until we get government to shrink. I mean, we've got a $300 billion farm bill out there. We've got a $300 billion plus mortgage bailout bill. We've got windfall profit taxes being talked. If our viewers want to do something about it, write letters to your congressman to stop all this massive government spending that is only going to make it worse.
Beyond the debasing of the dollar that Peter and Euron talk about, Gary Kay, we also have this coming from an emailer in Midland, Texas. No surprise, it's from Texas. The fastest way to resolve our energy crisis could be taken in November by voting against all members of Congress who are against increasing our petroleum reserves, whether by drilling offshore and in ANWR or developing coal. So, I mean, we could take different measures in Congress, whether it's increasing the number of nuclear plants we have, allowing for ANWR drilling, whatever, that may alleviate some of the problems we're under.
Well, that's a pretty darn good email. Look, I think it's about as psychotic as possible that we're on like a slow motion here to fix these situations. And all we're hearing is these little Band-Aids. Let's go after the oil companies, take money away from them. Yeah, that's going to help. The only way this is going to get fixed up over time is, to switch Paul Volcker for Bernanke. Take out Bernanke, put in Volcker. And let me just say one thing about this inflation thing. As of 2 weeks ago, Ben Bernanke is saying inflation is anchored, so there's also a credibility problem here that he would actually say something as crazy as that when everything has been shooting to the roof.
Well, with apologies to our emailer from Midland, Texas, Charlie Munger and Warren Buffett talked specifically about this because people ask them, what do you think of alternative energy or a situation with the high gas prices? And Scott, both of them use this word. It is asinine to continue to use anything that runs on hydrocarbons when we know it will eventually run out. You can, fight about drilling in ANWR all you want, but you're only sort of delaying the inevitable, right? And that solar is the way to go. Now, they're not investing in that right now because they don't understand it. And that they're very simple. They're the first to say people don't like us on Wall Street because we're simple, but they said it's asinine to run anything on hydrocarbons. We've got to develop the alternative vehicle.
Right, and then also by doing that, you're delaying or or I guess you're decreasing our reliance on other economies and other places to get the energy. At least we can rely on the sun, which we all have, or wind. But again, it just costs a lot of money to get that going. And until we have oil, say, going to 150, probably 200, I think the solar and the wind story just has not the emphasis behind it.
What about the nuclear story, Peter?
Well, look, we need nuclear power, but unfortunately, again, you're looking at the wrong issue. If we're debasing our money, all energy sources are going to be more expensive.
We're looking at that issue, too.
It's all going to have to
We are looking at that issue, too, but there are other issues besides that issue.
No, obviously, we should. I mean, I was investing in uranium stocks years ago because of the idea that, we're going to have more nuclear power, and the world was building more nuclear reactors. Despite that, but prices are all rising to reflect this insane monetary policy. That's what we have to talk about. We can't focus on prices. We have to focus on why they're rising.
We're at session lows today, right now, down about 220 points for the Dow Jones Industrials, and you've got a situation now where this is just feeding on itself.
It is, and it's hard to tell where the market's going to go tomorrow and in the next week. And going back to the nuclear story, we do need more nuclear power plants, and the only restraint on building more nukes is government regulations and government constraints. Get the government out of this, and the energy market will take care of itself. It's even at 120, carbon-based fuel is still the cheapest fuel out there. And if we just let the market work, yes, if prices go up, people will start investing. Venture capitalists will start investing in alternatives. The market will solve this situation out. But when government gets involved, we get a situation like ethanol, which is just a nutty market, which is causing massive food shortages. You get these incredible
even the United Nations agrees with you now on that. So that's got a lot of people against each other. But the fact is, even if we had a sensible policy at the Federal Reserve Board, according to Peter Schiff, we would still have supply and demand problems with oil, wouldn't we, Scott?
Well, that's why we need nukes.
It's a huge global economy. We've got a big global engine, chugging down the track right now, and so everybody's demanding oil. I mean, everybody says, oh, well, China's contracting. Well, what do they contract from? 10 to 8% growth. So obviously their demand from oil is not going crazy down the pipe. So, yeah, that's going to be pumping up price, too.
But they're also producing more oil. All this economic growth results in more oil being produced. The problem is it's being undermined by the monetary policy.
30 seconds,
yeah, but it's
less
also
than
being
that. Just hold on a second. We're about to get to the closing bell. So go ahead. You're on your final comment there.
It's also being undermined by restrictions, environmental restrictions on drilling in all these places that do have oil, off the coast of California, off the coast of Florida and Anwar.
All right. Well, unfortunately, not only are we drilling down, but the Dow Jones is going down, way down. It's off at sessions low, but not by much. It was down 220. It's now down 213. It's looking to settle somewhere in there, clearly over that 200 range. The trading day, thankfully, has come to a close.